I'm Matt Bishar with NAREIT's REIT.com here in Washington, D.C. for the Washington Leadership Forum. Joining me is Philip Charls, the CEO of the European Public Real Estate Association. Philip, thanks so much for joining us.
Great pleasure, Matt.
Now, I'd like to start by talking about Greece. And in your opinion, how has that situation impacted the European property market?
I think Greece, we should not overdo it. You read a lot about it. You have to realize one thing. The Greek economy impacts only 1%. It's 1.5% of the European economy. That's number one. Number two, I think Europe is in a much Euroland, so to say. It's in a much better state than we were 4 or 5 years ago. So whenever, and I do not think it's going to happen, if Greece would leave, it would impact us a lot less than, say, 4 or 5 years ago. Now, the fallout might be in countries like France, Italy, Portugal, so it's something that nobody wants to happen, and I do think that there will be a compromise that, as quite often in Europe, will solve the problem. If you look at the market, I mean, I think investors give the answer. We are up by 19% for the year, so what more do you want?
Now, in addition to being up for the year, you've started to see a number of European property companies go public. Now, how does this crop compare to sort of the last cycle, which didn't have the best results?
No, that was of course a difficult time. I think at the moment we're doing really well in Europe. Last year we had a record number of IPOs, 8.5 billion. Another very interesting number is that if you look at the total IPO money pot, the real estate market share was 12%. That has never happened before. So that's really important. The drivers are clear. It's the economy, it's the allocation to real estate that has gone up dramatically, and of course the fact that we have proper REIT regimes in a number of countries like Ireland and Spain that came out of the crisis. One very interesting thing I noticed recently is that the market is consolidating. We really are getting more, I would say, nowhere near yet, but more US type of companies. Very interesting on the retail side. The merger with Klépierre and Corio, driven by obviously the Simon Group's stake and the role, has now resulted in a second big retail player in Europe. The resi side, we see very interesting developments in Europe. In Germany, we have seen some consolidation, and there is a company now, Deutsche Annington, which is about the size of being number 3 or 4 in Europe. So 11 billion euro market cap company. So that is a very important development for us, and investors like it a lot.
Great. Now, lastly, the U.S. REIT industry is gathered here in Washington to talk to policymakers on the Hill. From the European perspective, what's EPRA's #1 regulatory issue this year?
If I may, I give you two. Number one is, of course, education, investor outreach. We do a lot together with NAREIT, whether it's either together promoting the sector in Europe or together promoting the sector in the US as well as in Asia. The other part that is really, really important is the continuing in lobbying. We have 2 countries that are still big economies or growing, developing economies that need improved REIT regimes. Number one is Italy. They have legislation, end of November last year. Now the job is to fill in the vehicles, which means you have good quality assets and good quality management. I am pretty confident that's going to happen in the next 12 months. The second country that asked to develop a REIT sector is Poland, and that came from home investors that for pension fund reasons want to have a solid listed sector. So again, great opportunity, and we keep working to move the sector forward.
Great. Philip, thank you so much for your time.
Thanks, Matt. Great pleasure.
For more on this and other REIT news and analysis, be sure to visit REIT.com.